So I think they did make the right choice. I think that was an appropriate move. I think it's right to get ahead of these risks, not let them come down on you, especially when you have limited room on your interest rate. It's wrong to save your ammunition, to save your policy space. You can get caught in a deflationary spiral if you don't move actively and appropriately and in anticipation of what might happen, and especially with inflation below the target. The costs of moving aggressively are much lower in that case. If I were going to make an error now with the uncertainty about how deep the disruption will be, how long it will last, I'd err on doing too much. You can always take that back.
But do you think that in any way they're at the mercy of the markets? And if so, do you think they'll be forced to cut again on March the 18th as the market is currently pricing?
I don't think they're at the mercy of the markets. I think they do need to take account of what the markets are doing, because what the markets are doing, both the credit markets and the equity markets, affect the cost and availability of credit to businesses and households. So if they see credit tightening up, if they see the cost of capital rising, they have to take that into account in what they're doing. But they're by no means hostage to the market. It's one of many factors that they need to look at.
You know, you say that they can easily take it back if they need to. How exactly would that work, especially in an election year?
Yeah, so I think we would have to get to the other side of this event, right? So you'd have to see how the corona situation was playing out, how much disruption it made, what effect it was having on the economy. It's going to be temporary. We don't know how long or how deep, but it's temporary. When you come out the other side, you make another forecast, you see where you are, and you set your policy at that time. So I think there's every time they meet, they can make a different decision based on what they're seeing.
Tom, where do you stand on the possibility for very low growth, if it materializes, in the Eurozone, Japan, China, to drag the U.S. Into recession? Or does the U.S. have to see significant domestic supply and demand shock for that to occur?
So I would be doubtful that low growth in the rest of the world could drag the U.S. into recession if the U.S. wasn't suffering from other things as well, like the coronavirus disruption. But it certainly will take a piece out of the U.S. economy. It may be a small piece, but it'll be one piece. It's one of those factors on the demand side of the economy. The demand for U.S. exports would be lower, that the Fed needs to factor in when it's thinking about its monetary policy.
You know, we've been getting some great data. Today's services data at a one-year high in the U.S. How much would it take to tip the U.S. into recession? We hear things like conferences being canceled and business travel being canceled. I mean, how much of a slowdown from the consumer and from industry would we really have to see before we could talk about recession, if at all?
I think quite a substantial one, and quite a substantial slowdown, because as Chair Powell emphasized, I think the fundamentals of the U.S. economy are quite good. We had good news on the job market today, so we'll see what happens as the week goes on. But I think the fundamentals are good. It would take a lot to drag us down. And the other thing we need to think about is when we define the word recession, we usually think of a big shock to demand that's driving unemployment way up. Here we're talking about a supply disruption for the most part, not entirely, but a supply disruption. People who can't come to work, supply chains disrupted. This is a temporary factor. It will go away over time. So I think talking about that as a recession, as we normally talk about recession, isn't helpful from an analytic perspective. And the Fed, as Chair Powell said, the Fed can't cure the supply disruptions. It's looking at the demand spillovers from the supply disruptions, and it can help to cushion that.
Don Kohn, great to see you. Thanks for joining us.
Thanks for having me on.